United States has sharply tightened energy sanctions against Iran as it looks to cut the country's oil exports to zero. Sanctions waivers granted by the Trump administration to 8 countries that import Iranian oil expired on Thursday, ushering in a new era of uncertainty for the oil market. The US announced unilateral sanctions against Iran in November. That was after the Trump administration abandoned a nuclear non-proliferation treaty with Tehran and the world's major powers. Washington agreed to hold off punitive measures against the 8 countries that depend on Iranian oil, including China and India. The sanctions waivers gave them until May the 2nd to find alternative fuel sources. And Tehran's oil exports have fallen by 1/3 to their lowest level since October 2014. But the country says it's working with its trade partners to ensure its oil exports aren't disrupted.
The Americans will see for themselves that over the next few months, we will continue to export our oil. They can block one path, but there are 6 other ways we can keep exporting. We have to export our oil by all means possible and stand up to them. Of course, some countries have given in to the intense pressure from the US.
Well, Turkey is one of the 8 countries that now risks US sanctions. Ankara depends on Iranian oil for much of its energy needs. And as TRT World's diplomatic correspondent Andrew Hopkins reports, it's working with Tehran to ensure the crude will keep on fueling Turkish factories.
Just 2 years ago, Iran was Turkey's biggest source of crude oil. But in the past 12 months, Washington has been pushing it to reduce those imports to zero. It's a difficult request for a country that has few hydrocarbons of its own and has also worked hard to improve relations with its neighbours in Tehran.
The US's unilateral decision has a very negative impact on everyone. We can see serious disruption from Japan to Europe. The US should reconsider its decision on this issue.
Turkey has opposed the US withdrawal from the 2015 agreement on Iran's nuclear program. Ankara believes it's the best way to stop the increase of nuclear weapons in the region and warns that any attempts to hit Iran's economy could destabilize a country right on its doorstep. Now Iran's foreign minister says an action plan has been agreed with Turkey so they can work around the sanction. They'll lower tariffs on each other's goods, use their own national currencies, not the US dollar, for trade, and set up a new trading mechanism outside the US-dominated financial system. It's effectively a company backed by the government that makes trade easier. The EU already has one with Iran, initially established to cover food and medical items.
All in all, these unilateral sanctions could be a harbinger of the deterioration of these political and economic relations of both countries, already closely working together, and also impacts the regional stability badly as well. So that's why they are very keen to stand against these unilateral decisions.
Turkey and Iran are also working together on the war in Syria, even though they're on opposite sides of the conflict. Their diplomatic ties, along with commercial ones, have increased in recent years. This branch of Melat Bank in the Turkish capital just shows you the kind of challenge that Turkey is facing. Melat has already been targeted by US sanctions, but is also part of an expanding trade network between Iran and Turkey, one that both sides hope will soon be worth $30 billion. Andrew Hopkins, TRT World, Ankara.
Well, let's get more on this now with Ellen Wald, who joins us from Jacksonville, Florida. She's an energy consultant and an expert on the political economy of the Middle East. And we also have our editor-at-large, Copetas, who joins us from Paris. Welcome to you both. Ellen, if I can ask you to kick off this discussion for us, how will the end of US sanctions waivers impact the global oil supply?
I think we're still seeing how this is going to play out. One of the things that this depends on is how much oil is actually comes off the market from Iran, and it could be a fairly significant amount of oil. India, South Korea, Japan have already canceled a lot of their planned imports from Iran. So we're really looking mostly at Chinese imports. So if a lot of oil does come off the market and Saudi Arabia and the UAE and others don't compensate for that oil, then we could see higher prices hitting us just as the summer months are coming up.
Interesting. Craig, the US says it's ending these sanctions waivers to deprive Iran of its main source of revenue, and that's to get them to the table in order to get them to abandon their nuclear ambitions and also abandon their involvement in the wars in Syria and Yemen. Is that the full story here?
Well, this story is like binge watching a Netflix series. It never seems to end. And it's not the full story. It's the story that Trump is sticking to, but it's really much bigger. It goes to Trump's geopolitical combat with China and other countries he finds belligerent. And again, weaponizing the dollar. He's using the unfettered power of the dollar and the unavoidable mechanics of the U.S. financial system to go after any country that has a right to do business with any other country it wants to. He's selling this back in America as a sort of fiscal patriotism, Oscar, and of course his base just laps this up. What's happening in the oil patch is these guys thought they were in business and now they find themselves in politics, and that's not a good place to be.
Ellen, the Trump administration says Saudi Arabia stands ready to pump more oil into global markets to make up for the absence of Iranian oil. Do you think Saudi Arabia will play ball?
Well, this is the question of the hour, and I don't think Saudi Arabia is going to play ball in the way that the Trump administration expects it to. We just heard that the Saudis are planning to increase oil production in the month of May, but they're not planning to increase exports. All that oil is going to go into their domestic market, and so unless they want to pump more to actually put onto the market and export, they're not really helping the situation here. Now, they have said that they are getting increased orders from countries in Asia for June and July. So the question is really, are they going to increase their production above that OPEC threshold of 10.3 million barrels a day to accommodate these increased orders? If so, then I guess they are, in a sense, playing ball with Trump. If not, then we're definitely going to see higher oil prices.
Interesting. And Craig, as we heard in Andrew Hopkins' package, the EU in February set up a special mechanism to allow companies in Europe to continue to do trade with Iran and avoid US sanctions. Do you think we'll see other countries set up similar mechanisms when it comes to perhaps importing Iranian oil to avoid US sanctions?
Well, they're certainly going to try. But they will stand no chance against the belligerence of President Trump. He doesn't care. He'll go after other banks. He'll go after other institutions and make a case that they are dealing with the Iranians, that even though they might be dealing in local currencies, they are in some way, shape, or form dealing in dollars. And again, he will, extraterritorially apply U.S. law. The question is now, we've known this has been going on for 2 years. Like I said, it's a Netflix binge watch. The question right now today is whether the rest of the world wants to say, okay, we're legally compelled to follow U.S. law. Or will they get together and say, enough of this, we're doing business with Iran. The 2015 agreement is just fine. You dumped it, President Trump, for political reasons. We're quite happy with the Iranians. We want to do business with them. Call Trump's bluff. And excuse me, I don't see them doing that yet, but that's where this is leading.
Okay, Ellen, what do you think is the answer to Craig's question? Do you think countries will defy the Trump administration or go along with it?
My sense is that there is a great deal of hesitancy, particularly amongst Turkish importers, to defy these sanctions. There's a lot of concern over the overall effects, and Turkey had cut its imports of Iranian oil very, very significantly prior to receiving these waivers. So I would expect them to really approach this, the refining companies that have to actually to interact with Iran, to be very, very hesitant to go out and defy these sanctions. When
Mm.
it comes to other companies, I think the case of China is a really interesting point because Chinese companies have continued to work in Iran, but a lot of them are pulling back, not necessarily due to the sanctions, but due to very difficult operating conditions with Iran. They don't like, whether they're being paid it or not. There are a lot of issues that they're having. And so, to some respect, the pullback in business is not entirely even related to the sanctions, but just to the fact that it's very challenging to do business with Iran.
And Craig, we've spoken about the impact on the importers of Iranian oil, but what about the impact on Iran itself? We've got some figures showing, according to the IMF, that inflation could reach as high as 40% this year, and we know that the rial plunged more than 60% last year. I mean, what impact could a drying up of its oil exports have on the Iranian economy?
Waiting for a evaporation of Iran's oil exports to foster change in Iran is like waiting for Godot. I've heard that story before. I think what is interesting at this point, diplomatically, is about 3 hours ago, the U.S. Senate Foreign Relations Committee finally approved David Satterfield to be the new U.S. ambassador to Turkey. Now, this is key because Satterfield is an old State Department hand with a lot of on-the-ground experience in Iran and in the Middle East. And I suspect over the next week, this whole question of sanctions is going to be the first thing the newly appointed U.S. ambassador sits down to discuss with the folks in Ankara.
And Ellen, if we could end this discussion with you. We know Saudi Arabia needs, I guess, the oil price to stay at least above 70. Some say up to $80 a barrel in order to stay in the black. Do you think Saudi Arabia will be very reluctant to pump more oil just because it needs the money?
Well, I wouldn't necessarily go by that $80 as a hard line. They really don't actually need oil to be that price to meet their budget. We now know that the way things work is they can take a dividend from Aramco if they see a need to take more money. In fact, they actually ran a surplus in the first quarter. However, I don't think that they're going to want to pump more oil for necessarily for their budget, but also because they're struggling to keep OPEC and also Russia together. And if they look like they're pumping more oil just to satisfy President Trump, they're done for. And the entire OPEC organization and their production deal could fall apart if the Saudis look like they're beholden to the United States. So that's going to be a very powerful push for them not to pump too much oil, even if they could be making plenty of money off of it.
Okay, it'll be interesting to see what the major players do in the coming weeks and months. Ellen Wald in Florida and Craig Copetas in Paris, thank you to you both.